So now that we understand a little bit about the perpetual record, let's talk just a bit about cycle counting. What is the definition of cycle counting? It's an inventory accuracy audit technique where inventory is counted on a cyclical basis throughout the year. It's defined and the count is regulated by certain criteria, and we'll talk about those criteria in just a second. There is also the items are counted in a certain sequence depending on their importance, and we'll talk about how we do that. And the last issue is that cycle count requires trained and dedicated personnel. It's not just some stock guy out in the back, receiving guy that goes out and counts inventory. This is a trained, dedicated person who understands how transactions are used. And so therefore, it costs money. One of the things that I just annoys the living what's it out of me is when there's a cutback, one of the first things that management does is they count the cycle count program. That's the last thing you want to cut back is on that cycle count process because it's going to buy you lots of good benefits. The purpose of cycle counting is the identification of errors and the correction of the conditions causing those errors so that we have this correct statement of the assets of the organization. So it's not just correcting errors, it's getting rid of why errors occur. The advantages of cycle counting are that it's timely. The correction of problems happens almost immediately. There's little or no loss of production, as we'll see with the physical inventory. And we can apply the logic of root causes to the elimination of these errors and their occurrences. It's a high level of inventory accuracy. The financial goals of physical inventory are, again, the correct statement, the minimization of the net variance. Now, this is from a financial or an accounting point of view. And we'll see that there's a great difference between the accounting goal of physical inventory and materials management. Because in an accounting sense, we want to have a minimum net variance and we want to make the auditors happy. That's always an important thing for the finance people. But in terms of materials management, we need to have accurate quantity on hand because that's the way that MRP, scheduling, shipping, everything is based upon that quantity on hand. So the more accurate our quantity on hand is, the better off we are in terms of executing our plan. And then the correction of errors, obviously, through cycle counting, and then ultimately the cause of the error. If somebody back in the stockroom is writing 7s like 3s, go teach him how to write 7s. ABC classification is basically classification of inventory in descending dollar usage, where items are classified by ABC. And the underlying principle is we apply more effort to make the A items accurate than we do the C items. It's probably one of the most used analysis tools in business. Just a quick example of how we do ABC, basically 7 steps. Calculate the annual unit usage, determine the annual unit usage in dollars, rank the parts, calculate a cumulative value, cumulative percentage, identify your ABCs and upload to the system. So here we've got a set of 10 parts, their unit usage and their unit cost, and we simply are going to now multiply the unit cost times the unit usage to come up with this annual dollar usage. And you can see that in total we have 38,250 in this particular population of parts. The analysis then is we calculate the cumulative dollar usage in descending value, and then we can calculate the cumulative percentage usage. So you see the first part is 24,000, accounts for 63% of my total population, a classic example of the ABC analysis. Then we continue on down, and then based on our analysis, we assign various ABC codes to those. And those ABC codes are entirely up to you, how you want to measure them. Then we enter the codes into the item master file in 1.4.3 to give you your count process. So how do we do cycle counting? Well, there's a rule. You do cycle counting, but you always have to be prepared for a physical inventory. We'll talk about physical inventory in just a second, but it's basically a statement of have the place clean. Know what you're doing. There's the old 5S that comes from our lean brothers and sisters that say sort, set in order, shine, standardize, and sustain. Make sure that inventory is visible, that everything is labeled in inventory, that you don't transfer parts without it being recorded in QAD, that all of the items in the containers have labels. So this is basically the first rule of both physical control and cycle counting. The process, since we've only got 3 basic menu items, is first of all, you print your cycle count worksheet. Then you go out and count the parts. You come back, you enter the parts in your cycle count results of 313.2 with an initial count. Then you recount those parts that are out of tolerance. We looked at the 3.24 last November and saw that we set those kinds of tolerances in the inventory control file. And then after you've recounted, then you put the recount results in 3.13.2. This is just a little frequency calculation that can tell you how many people you need to do physical or cycle counting. If you've got a number of items that are classified ABC, you're going to count your A items probably 12 times a year, every month. Your B items every quarter, your C items maybe twice a year. You could total those up. If you have about 250 work days per year, that says I got to do 184 counts per day. Well, how many people does that mean? So I can calculate how many people are going to be required to do my cycle count program. The cutoffs of cycle counting are critical. This is one of the key considerations of a cycle count program. You want to minimize or eliminate the movement of inventory during the count process between the time you do the 3.13.1 cycle count print and the input into 3.13.2, the cycle count results entry. There's lots of ways to work these cutoff controls. You can count during operation or non-operational shifts, at the end of the day, beginning of the day, hold documents for the next day. Probably the most effective is the use of what we call the hang tag. So when you count, there's also other types of selection criteria for cycle counting. Perpetual record equals 0. That's a good time to count. You haven't got any, so go verify you don't have any. Is the item back ordered? When we move items between locations, the stock guys are already handling the material, probably a good time to cycle count it. During the pick process, when suspected errors occurred. So there's lots of different ways to do it, but if there are no other resources and you have to do it during the shift, use a hang tag. And a hang tag is simply a piece of paper, pre-printed, computerized, handwritten, that gives the people in the stockroom the ability to record what has happened to a particular part in a location, and then it gives the cycle counters a complete picture of the movement of that item during the process, so that you can verify the count and understand what has caused the variance. Lots of tools and techniques for counting, scale counts, hand counters, location planning systems, uniform container sizes and qualities. All of these things should be in place to ensure that you've got an accurate representation of that quantity on hand. Here in 3.24 is where we set that tolerance, and this is to trigger a reconciliation. Here we've got A items less than 5%, B items tolerance is 2%, or excuse me, 0.5%. C items are 5%, along with a $100 value. So here's a simple example. We got part number 12345, It's a C item. It's worth $5. I actually count 500. Record says I've got 525. Well, that means that I've got a 4.8% variance on count, which is less than a 5%. But when I do it on a dollar value, it's 125, which is greater than the $100 tolerance that I've set on. So the question is, should it be adjusted? You've got a couple of different ways you could go. You could adjust it or not, or if both measures are within tolerance, then you probably, or outside of tolerance, then you probably need to do a recount. So you really need to understand the procedures, the guidelines, what the auditors want, what the accounting people want, and it needs to be understood and involved with all people in the organization. Once you've determined that a part needs to be recounted, a lot of systems have a recount ticket that you can print, or you just give them back the 3.13.1 cycle count print, and then they go out and recount it. But again, you need very strict procedures on how and why you recount inventory errors. So this is just a brief statement of the steps you might go through. Compare the actual to perpetual. Test your reject acceptance criteria. Maybe you need to adjust the reject criteria. Are you going to recount it? Do you go out and recount it? And then adjust the count when it's justifiable under the criteria. Then ultimately you want to reconcile and find the cause of that error and fix the problem so the error doesn't occur again. There's all sorts of reasons why parts are out of tolerance, missing documents, incorrect quantities, backflush problems, work order close problems, legibility, wrong parts. So you need to have some methodology of identifying there. A lot of companies use either the remarks field or reason codes to identify the reasons for cycle count errors so that you can do that analysis or that Pareto of why things are being in error and go out and correct them. This is just a simple checklist. And again, the basic goal is to determine the cause of the error. So check for all missing documents, check the where used, check incoming inspection, and check the MRB. And this is why you need trained individuals doing cycle count, because they really need to understand the whole flow of the product from the point of receipt in through the stockroom, out to the work orders, back in, and then finally into the shipping. And so you need to have a method of tracking and understanding what those are. So ultimately you retrain and eliminate the cause of those errors. How you calculate your cycle count accuracy is really up to you. I mean, it's got to be approved by your external auditors and your accountant. I've seen dozens of these kinds of calculations where you take the system, the actual count, calculate your variances, and then just basically keep track of whether you're inside or outside of tolerance. So once you get all of your activity, you simply run this analysis of what your accuracy is, and you come up with, in this particular case, a 53% on-hand accuracy. Boy, that's pretty bad. QAD, MRP, scheduling, shipping isn't going to work very well with a 53% cycle count accuracy. However, accountants might be very happy because their net dollar variance is only $123. So from a financial point of view, maybe I've got a fairly accurate inventory. From an on-hand point of view, no, you need to improve it. So we want to pay attention to our quantity on hand accuracy, not just the net dollar variance.